Hey, welcome to Money Club Mondays, February 5th. Today's going to be awesome. We got all kinds of cool new opportunities. So today we got a really cool show ahead of us. We have my friends from Philanthro Investors, and they have a few different companies where they do different investments, but it's always backed with philanthropy. They've done an excellent job. We've been working with them now for a couple of years. They've been coming on the shows. So Riggs and Ken, thanks for being on, guys. How are you?
Thanks for having us.
We're super excited. I guess the last time we got together, we were talking about, and I'll share a screen right now, and Ken and I will be able to comment on this further. But basically, OriginClear is essentially an incubator, and what we did was we combined everything we developed since 2015 into a company that is now merging with what's called a blank check company. Here's the last big announcement that was made, where we signed a definitive agreement to join with a blank check. It's called a blank check company, special purpose acquisition company called Fortune Rise. The actual valuation was actually not 32 million, 72 million. That's been corrected in the Yahoo original, which is a combination of $40 million on the FRLA side in cash and $32 million valuation on the water on demand side. So now what's next is a filing called an S4, which is a merger registration with the SEC. We expect that to occur imminently. I can't say exactly when, but the closing date of Q2 remains firm on the business combination. So what are we talking about here? We're basically discussing a brand new thing in water. And those of you who haven't heard about it, water in general in America is in trouble. And what's the solution? Well, we have failing infrastructure with $100 billion gap every year. And $100 billion is still a fair amount of money. I don't know about you, but I think that's a lot of money, and nobody's really allocating it. And what's further happening, I don't know if you saw this, but Mexico is booming right now because of all the industries that are coming back from China and other offshoring countries to the North American continent. With that comes new needs to both supply energy and water to these factories that are coming back. So very important. Factories now have to do their own pollution management. Funding, again, here's another funding slide, not important to get into. And the utilities can't take care of it themselves. In fact, they're raising rates faster than the rate of inflation of college tuition. That's how bad it is. So water rates and sewage rates are rising much faster than college tuition. Healthcare, right now, it's the number one inflation on the country, but that's not solving the problem. Meanwhile, a lot of people are being thrown off the system, which makes things worse. Far right, you see 56% of water utilities are reporting problems with customer non-payment of bills. Well, when somebody doesn't pay their bill and you throw them off the system, now they're on bottled water. It's even worse. So what's the solution? Well, you remember one thing that's very important to remember. The actual users of our water system are industry and agriculture. 90% of all demand for fresh water and for water treatment is by industry and agriculture. 10% is the people, you and me. We need to flip that around. We need to make it so you and me get proper water treatment. And how's that done? By getting industry and agriculture off the central grid and doing their own water treatment, which, by the way, they like very much. That's where we got into something called water on demand. Let's take a look at that. If we do this private water reuse, which is I've been telling you about, you have all these different sites doing their own water treatment. And this means the central plant is less burdened and it can serve the people. We have 150,000 plus water utilities in this country, some of which have as few as 3,000 customers. And I don't know if you noticed, but there's a huge out-migration trend right now, started with COVID, where people are moving out to the boonies or to different states, and those don't have the same high-grade industrial water treatment that, let's say, LA had, right? All of a sudden, they're in Gainesburg, Florida, and it doesn't have the same resources. And so That's why we got to reduce the load on the central plants by having it happen at the margins. Okay. Benefits to companies. They control the cost. Remember, that's the highest, fastest growing cost of any cost category in America. Number two, they can reuse water. Guess what? That's a savings. Number three, they have independence from utilities. So they don't have to be so dependent on the whims or the politics of the utilities. Private water gives businesses control over their water. All right. Now, what do we need to do that? Three things: technology, expertise, and capital. So for technology, we built a company that basically does downsizes those huge water treatment systems to the level of a business. Call them pods. I like to call them pods. And you just drop the pods in, plug them in, and boom, the business is doing its own water treatment. Engineering, we have a fantastic company that's been in business for 25 years that does huge water treatment for power plants, hotel chains, and so forth. The final idea is something we created internally, which is a lot like the way oil and gas is funded. We'll talk about that a little bit more. So water on demand, what happens? Well, let's say that you're currently a business that's getting water treatment from the city. Along comes water on demand and says, hey, why don't you do your own water treatment? Okay, sure. And guess what? You don't have to come up with any capital. Just sign this piece of paper and you'll keep being on the meter. No capital required, with these cool pods that we're talking about and this more than 2 decades of engineering expertise. Okay, so, and I'm going to have an update about that very shortly because we have some new news about it. Quickly covering the fact that water on demand is unique. Why? Because we are pure play in this water as a service concept, and we're the only company in which regular investors can invest. Everything else is either managed capital. Morgan Stanley manages the 7Cs project. Cambrian is VC funded. And of course, the top left companies are all public companies that you can invest in, but they're not really pure plays in this water as a service. They're doing the old school stuff, which is the dying business of utilities. This is the patents. I'm not going to spend too much time on this because I do want to spend a bit more time with Ken talking about the new stuff. But basically, modular water is a patented way to deliver water systems in a box. These are some of our current customers, housing developments, et cetera. And it looks just like what you think it would look like in a container, drop in place, and it goes. Also, the same thing with something called pump stations, which I won't get into, but those are important too. And I can play the testimonial videos, but I can just tell you that customers rave about this technology. Modular water, which we launched in 2018, has grown more than 7 times from 21 to 2023. And progressive water, which is this large scale systems, has done this very similar. 2021 to 2022 is more than double. And as a result, we have a synergy, right? Now, what does that mean? That means that combined, these 3 companies look very interesting. Notice how it was, bumping along at about $1 million a quarter, and then it more than doubled in 2022, and we're on trend to continue. So that's with the combination of the 3. Water on demand, again, I'm going to cover that with some brand new news, so I want to get through these graphs and talk to you about that. Well, what is so cool about us merging with a blank check company? It's the capital, stupid. It's because I'm not calling you guys stupid. I'm using the old saying, it's the economy, stupid. Well, in this case, it's the capital, stupid. Because with the capital that'll be available from this NASDAQ merger, A, we will be a NASDAQ company, which makes capital raising much, much easier. B, there's the capital, whatever capital remains in the blank check company after the merger, which we don't know, but it'll be some amount which we'll be able to put to use for what? For acquisitions. Acquisitions is the fastest way to grow your business, and water companies are available at a very low PE because of the type of business that they are. And sure enough, here they are. I'm not going to get into some of the assumptions, but we are talking about spending in phase 1 about $10 million between cash and stock, and getting a huge bump from that because of the revenue, what's called accretive, meaning it adds revenue. And As you can see, the green here is how the acquisitions will dramatically help with revenues. Profits take off. Now, literally, look at this. The profit, the total revenues without acquisitions, $32 million down there at the bottom right. Well, look at here. Same year with acquisitions, profit exceeds the revenue without acquisition. That's why this is so important. It's highly profitable. Now, one last slide, and I'll get into the new news, and that is all phases, phase 1 and phase 2 by 2027, we have the opportunity to get in excess of $500 million in recognized revenue, which is very exciting. So I'm not going to get into the planning because we'll talk about that. This is me, came from software, disruption guy. And here is Ken Berenger, who's on the call with us, co-created Water on Demand with us. And so we are now going to talk about some news that we have from the presentation. So I was just doing a big replay, and we are very excited about what's happening with Water on Demand. In that presentation, I sandbagged Water on Demand. Why? Because I didn't have any projects. That is changing. We now have a partnership in the works, and this is so cool. I'm so excited about it. This is the segment called mobile home parks, trailer parks. And those have tremendous pollution problems. So typically, they just have a pond where the poop goes. It's pretty sad. And in multiple states, thousands of these are being upgraded. And it's a highly standardized, super simple wastewater processing system, which we've already pioneered. We already do trailer parks. We know how to do it. We've paid the dues. And we're coming into a partnership where we expect to be able to deliver these units on the capital-free basis. And Stephen, I don't know if you know how bad it is for mobile home parks, but we know one customer that we got to before that we had this Water on Demand. She had to give up half her equity in the mobile home park to pay for the water treatment.
Wow.
That's pretty sad. Right.
Yeah, I think it was actually, I think it was
curious,
60%.
anybody on here right now, does anybody own any mobile home parks that's on, or is anybody investing in mobile home parks? You know, a lot of people are probably pretty familiar with those. I'm just curious, Riggs, but go ahead.
Please. And we'll happily discuss with you, just invest at originclear.com is the best way to let us know that you have an interest in doing this, because we'll put it on the fast lane. But here's what it is. These things are highly standardized. In Texas, this is happening in Texas, where there's a boom going on in water treatment. So Texas has special rules for anything under 5,000 gallons a day. You can drop these things in fast. Nobody pays up front. Investors fund it. We return residuals to the investors, and the investors get a huge amount of equity. Ken, tell them a little bit about how that works.
Hi, good afternoon, everybody. Okay, and again, kind of digging in a little bit deeper, I think we've all been recently approached through social media and email about investing in mobile home parks as a vehicle, yeah, and campgrounds. Riggs, I was reading some of the comments, so just repeat your question for me real quick.
Oh, no, I was just saying that you were going to jump into how the Water on Demand investment works.
Okay, so structurally, and there's videos that Riggs probably played last time, didn't play this time. You'll see a self-sustained system that literally is built in a factory. They water it, they test it, and they drop it, and there's like no contracting involved. So picture that apparatus, and this is a freestanding system that can be placed anywhere. And above it, a micro utility network that'll handle all of the contract enforcement, contract management, billing. And of course, out the other side comes this revenue generation. So what investors enter is something fairly close to a master limited partnership type of arrangement. You're not investing, you got one public and another soon to be public company. You're entering actually into the equation as a property participant. You're entering into a fund where there's going to be $20 million worth of equipment placed on like in these mobile home parks. And the per gallon rate is then throwing off revenue. So you're going to receive 25% net profit on that per gallon fee. And that's for the life of the contract. These contracts are right around 25 years, okay? So the revenue that's thrown off is several times what your initial layout in the equipment is. Now, you have the equipment, and that survives any equity exit that you choose to take. So that's going to continue to, crank out inflation indexed income One thing that I don't know if you mentioned in your last conversation, Riggs, water and sewer rates actually outpace college tuition in terms of inflationary impact. So in terms of staying ahead of inflation, if you just stuck with college tuition, you'd be fine, right? But with water and sewer rates, it actually exceeds that. It's on pace to do it with as much real-time change as is energy, but everything is clean. So we believe that the crowd that really wants to promote a greener earth will participate in that. Anyway, getting back to that, you'll collect those revenues, ad infinitum, 20, 25 years. Now, what's interesting is we formulated this idea, and it was really just a concept. It was a concept operation. We had modular water kicking butt. We had progressive water kicking butt. But then we had this fintech idea of how to make it all happen in the cloud. Now that we've merged these three things, this is a fully functioning, fully operational company ready to go. You're going to be granted, in addition to your 25% net profits, you're going to be, we carved out 10% of water on demand. Now, at the time, again, our thoughts were maybe we'll do a Regulation A, and in 3 or 4 years, it'll be public. So we were extremely generous, thinking it was going to be a long time before we had to, part with that stock. Here we are. We're about to sign an S4, hopefully, right? So 10% of that company is going to go out to the investors. The first 20 million, we're about halfway there. So you'll get a pro rata share of water on demand. Okay. And in a one-on-one conversation, I can break down actually what that's worth today, what's it worth when we merge the two entities, and then based on our growth projections, what that might be looking like in 24 or so months. But 10%, and that's free grant of stock. Okay. So it's worth more than what you invest in the equipment as soon as it hits the market, in theory. And then secondly, you're going to receive a second grant of stock. Now, this is in the parent OriginClear. OriginClear has now positioned itself successfully, I might add, as an incubator. We created 3 companies, 2 out of, Riggs, you wouldn't argue that 2 were from nothing, from the ground, right? PW2 we took on that had a successful 20-year business, but the other 2 were ideas. We took on the brilliant Dan Early and all his designs and his vision, and we financed that and was able to turn it into a multi-million-dollar company. And of course, Water on Demand, which was the fintech that rides above it. So OriginClear has now distinguished itself as a successful aquatech incubator. The first 3 projects it's put its hands on, it's now graduating to NASDAQ, right, for a major equity event. So you're going to get a grant of the parent company. Now, the parent company does trade. It's on the OTC, right? It's still just a penny stock, but it's going to own a massive portion of Water on Demand when it hits the market. It's also going to be deriving, I think, a very generous amount of real-time fees, because we're going to perform all kinds of vital services in the beginning. It'll be accounting, fundraising. We were going to do legal, shareholder relations. All that stuff is going to be so the parent essentially got 3 children through Harvard Law, and had to pay through the nose to get them out of Harvard Law. And now they're graduating. They're all going to top tier law firms, and they're going to begin paying back the parent. So you're going to get a grant worth 1.5 times. And we're going to, I think after this next announcement, we'll start to, kind of ratchet that down. But you're going to get a grant of preferred shares that's worth 1.5 times what you have in the equipment. Okay. And it's preferred in the sense that it's price protected. Stock goes up or down. It's worth 150% of your investment until you decide to convert. At the day of conversion, it's 150%. Now you're in the market. It either goes up or it goes down. So you could literally part with it and maintain, you could part with 100% of your principal and then maintain the rest, because we believe that between being profitably performing vital services for the offspring companies, in addition to having now the notoriety of successfully incubating its first aquatech company, I believe that and we're going to be launching a Regulation A offering, which is a crowdfunding offering. So it's for non-accredited people, kind of, mom and pop and grandpa. Very small investment amounts are doable in this. I also think that a lot of folks that don't want to invest in a unit offering, even though it's much more leveraged, it's much more generous, want the alacrity of being involved in the market. I think that they could participate in the open market on the company, and that also could do very, very well for it. So essentially what you got is you have equipment, you've got long-term income, you've got what could be a very near-term liquidity event with the offspring company, Water on Demand. And then you have a second grant worth 1.5 times your investment in the parent company, which, by the way, I believe, Riggs, we'll be talking soon about our next incubation in the barrel, right? Soon.
Correct. So
not today.
well,
Not
here's the
today.
thing. We have a massive project to be, we have two things that we do with Water on Demand. Number one, it's currently its biggest shareholder, and we will still be the largest. We have a majority of Water on Demand today. And even after the merger, we will likely hit its largest shareholder, number one. Number two, we are the source, as Ken said, of the management services for Water on Demand. And this is what is cool about our model is when we take a company, we accelerate it through to some kind of exit, we provide the support services so they can be a company light, right? This is very important because you don't want startups to be worried about all the administration and so forth. We take care of it for them. Now, what is the special sauce that OriginClear brings? Because there's incubators everywhere. What's so special about us? Well, we have developed a real strength working with everyday investors. We believe strongly in accredited investors and also crowdfunding investors. I think our investors today, those who've stuck with us, are very happy, and we'll be able to, and that's kind of our superpower, is that we're able to work with those kinds of investors. And Stephen, I don't know if, I think you know this, conventional opportunities to make money as an investor are few and far between for everyday investors.
Right.
That's the biggest problem out there. It's like, I was looking at my wife's 401k and I was like, you're right about 401ks. What a mess. It's like, it's a loser's game, right? So where can we get pre-IPO opportunities, right? I mean, Ashton Kutcher was an early investor in Airbnb. He made 157,000% on his money. Excuse me.
I think it was 140,000, but
well, whatever it is, we're within 10,000 of
I mean,
what it
within
is.
10,000% is just among friends. Exactly.
Right.
So I would like to add to that. One of the strongest feedback that I get from our investors are, because we designed this system, look, we are the target, right? I'm in my 50s. I'm an accredited investor. I've donated $1 million over the last 10 years to ideas that were incredible. Still waiting. Okay. Because the structures themselves weren't far enough along to be anything other than purely aspirational. And they weren't really defensive. They didn't say, okay, look, this, in other words, it's like playing poker and relying on a straight flush in order to win the hand. You just can't play poker that way. Well, they were forcing investors to play poker. Okay. Or they were simply funding it straight to the VCs first. VCs would, of course, gorge themselves on new deal flow, right? Airbnb, the first round made 157,000%. The second round, I think, dropped to 5,000%, right? It was a staggering drop, and you could probably pull up the rounds, but so it went from 100 some odd thousand% to about 5,000%. Listen, most people would still jump at the opportunity, but the last round was 60% on their money. Okay. And if those of you who know about Airbnb know that in 2020, we had a thing called COVID, and Airbnb, the IPO was in genuine risk, right? Silver Lake Partners had to jump in at the last second with $1 billion cash infusion just to keep it alive. So folks like us don't really get deal flow like this. We get to eat when the mainstream investor is buying off of what Larry Kudlow says. And that's usually, I don't like my odds. So the opportunity, we've turned the opportunity completely around. We've actually positioned accredited investors first because we're not trying to raise $500 million. We can incubate these companies for $10 million, $20 million, $30 million, which is very manageable, even one investor at a time. Our average investor has several $100,000 invested in this idea. You only need a few hundred of those, which even as a one-man army is very, very manageable for us. So that is our superpower. But it's also what makes us, I believe, so attractive to those guys guys like you, guys like me, that are out there looking for deal flow that, really always have to eat last.
This is something that I put together back in 2021, but it shows what happened, as you're saying. And there's Ashton Kutcher, and he made 157,000% on his money. So he probably put in about, I don't know, $500,000. Do the math. He did very, very well. So the numbers went way down after that. And that's unfortunately, Airbnb is a public company today. You make 10% a year, you're a happy camper. That's
right.
Not where it's at.
Right.
David and Dorothy were just asking, maybe talk a little bit about what are the risks, what are the exit strategies, the terms look like. Maybe talk a little more on the investor side, what this looks like for anybody that has money on here. And just as a reminder, things like this, investing with like a self-directed IRA is you have a lot of people that do that, right?
Sure.
Self-directed
100%.
accounts, using a policy, we're looking at these different, so like the stuff we talk about all the time on Private Money Club, we're looking at making that spread. We're looking at, maybe hedging out of the markets with these all-time highs. I saw the market was taking a bath this morning. I haven't looked this afternoon if it's rebounded back, but they hit all-time highs again Friday, back down today. Just, my opinion this year, we're going to see this market just really roller coaster and start to pull back. So, the whole idea of Private Money Club is where are these alternative places we put our money now. We do focus a lot on real estate, just so you guys know too, Riggs, direct lending on real estate deals, flips, development deals, things of that nature. So maybe you can also just talk a little bit about, just some of the differences, investing through something like this as opposed to like a real estate deal. And the reason I have you guys on is because, I love real estate investing. It's my foundation for everything. But, last week on Wealth Webinar, we had a guy talking about oil and gas. And so we like to bring on different opportunities so people can diversify a little bit and have other options to be able to spread the money around a little bit. So maybe just hit on that stuff some, if you mind.
Yeah, so I see a couple of questions: risk, terms, exit strategy, and what's minimum investment. I do speak a lot to real estate investors. If, when I grow up and when I retire, I'm just going to play real estate. I love real estate, right? I own a bunch of single family homes right now. I'm going to move into commercial real estate. So I often refer to this as, this is set up to where, you buy a multi-unit property and your rent rolls do what? You don't get wealthy. You completely monetize your outlay, right? It covers your mortgage payment, taxes, insurance. Sometimes there's a little money left over. Generally something breaks and, it goes towards that. But the point is that you're locking in $2022 or $2023, or now $2024, knowing that the dollar will be far weaker 40 years from now or 30 years from now. The value of that property may be 10 times what it is today, but it still buys the same amount of goods and services in the future as it does today. So it's a way to kind of freeze dry your net worth. Well, that's what these payments, these royalties are designed to do. Not necessarily create a whole net worth event, but keep your income ahead of inflation. Now, what real estate doesn't have, is it doesn't have built-in exits, and it also doesn't have, very often, unless you're very fortunate and you buy something with mineral rights and you hit gas on the property or something like that, very rarely has a life-altering potential liquidity event. Having this company graduate to the NASDAQ, you asked about risks. Well, I designed this for me. I'll be 57 this year. As I said, I donated a lot of money to great ideas that I'm still waiting on. The only thing I haven't lost money on, guys, is real estate. Now, I'm not killing it, right? And when renters go bad, it's a hassle and all that stuff. But generally, I know that no matter what I put in real estate, it's going to be there 10, 20, 30 years, and that's for my children. So I built this with me. I still want to turn a little bit of money into a lot of money, but I'm a little more chicken-hearted at 57 than I was at 37, right? So the risks on this are that if everything we're attempting to do were to fail, it would put the shorter-term liquidity events at serious jeopardy, or certainly extend them for a long period of time. That's inherent in any investment. However, preferred stock preserves your principal. Okay, so there's two equity events here. There's a grant of the actual company that is now graduating the NASDAQ, and I don't know if we're going to talk, Riggs, about when we expect that to potentially happen. Are we?
Well, I said that it was happening imminently, but I can't say exactly when.
In the past, companies that enter this phase where they're registering them, they could be 3 or 4 months. We're not saying that we'll be that, but 3-4 months is.
We're saying Q2. I mean, we said that publicly, and that we're holding.
Okay. All right. Yeah. Q2. Yeah. So, okay, fine. Q2 looks like, end of Q2 looks like about where we will be. So that's your first exit. Your second exit, which might be simultaneous, might be shortly thereafter, might even be before, is the grant you receive in free shares of the parent company. Now, why is it so generous? Well, it was done when Water on Demand was literally an idea. It was just aspiration. But because we were putting investors that have millions of dollars with us and have been investing for years and years and years, we saw no need to change it and make it less generous to reward the folks that have been with us forever. As we graduate to a new phase in our life, we probably will likely do that. So the exits are months, a couple months out. Even if you sell all your shares in the both Water on Demand and OriginClear, the revenue generated by the pay per gallon, that stays. That stays.
Your fund investment continues to generate royalties, and
Right.
we do plan an exit from that,
which we're building now. Yeah.
which we're building. It's a marketplace that's future, and we're not currently publicizing it, but there is an exit from that as well.
The whole point is this: every dollar you invest, you're receiving $2.50 worth of stock, both of which have very near-term liquidity events. $2.50. So the point is, even if you didn't exit on your revenue generator, this would be, for your real estate investors, it'd be the opportunity to sell the apartment building and continue to collect the rents for the next 20 years. So that's, and of course, significantly greater leverage and upside than just selling the property for some small premium above what you paid. This could be a many X type scenario, which, we've been very meticulous in how we've laid out this exit and what elements add to the very rich upside on this. And that's something that's a little more granular, requires some context, but I would be happy to discuss that with any of you in a one-on-one interview.
Very cool.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Okay, so I guess what does that look like? Like, what, if somebody's interested in investing and getting started with you guys, what's that look like? What can they expect? Maybe just paint a picture, maybe some of the paperwork or time frames, things like that.
Well, answer that last question. How do you get in touch with me? So you're going to go through my staff. You're going to type in oc.gold/call Ken. oc.gold/call Ken. All right. And that will get you on my calendar. My staff will try to get you on as quickly as possible. I think I'm booked out through the 13th or 14th right now, but we'll try to squeeze you in earlier than that, as we have things that are changing on the vine. Okay. In the typical investment that we do is 100,000. However, I have done partial units on numerous occasions simply because the investor said, look, Ken, I love the idea. Here's what I can easily come up with without any problem. Sometimes that's several $100,000. Sometimes it's, 50, right? So I think that accredited investors by definition know where their money is and know what they're comfortable with. They don't need someone else kind of insisting. I hope to get to a place in the not too distant future where you're turning investors away because it's not large enough. We're not there yet, which is part of why we're so appealing. We're dealing with folks that, think like we do.
Yeah, absolutely. Yeah, the accredited investor thing's always amazed me. I saw that they have a bill in right now where they're trying to make it where somebody can take a test and qualify to be accredited investor as opposed to making all the financial levels, which I think would be great because at the end of the day, how many rich people that are dumber than a rock when it comes to their money, and then how many people are trying to do better for themselves, and opportunities like this could be the answer, but because they don't financially qualify to be accredited, they can't get in. But what if they're smart enough to where it does make sense for them? So I love it. I love you're willing to work with, and talk with more people like that too.
Well, one of the keys of the right target is when you say, well, what's your net worth? They go, I don't know. Ask my guy. That's the guy, right? I don't know. Ask my guy, so yeah. And it's truth. Someone else usually, knows where your money is to a greater extent than you do. You run the business day to day, what the, payroll is and things like that. But, overall assets are generally run by your professional CPA, whatever. So
I was asking real fast, Ken, you mentioned mobile home parks. So therefore I'm wondering if the system's a potential replacement for existing ill-performing septic systems.
Yes.
Or am I not understanding correctly?
Yes, that's it. Not only is that correct, it's not only going to replace the existing, what they call passive systems. This will allow for rapid, incredible expansion of rural and exurb properties, including luxury home development. Look, I live in the hills of Western Pennsylvania, 20, 30 minutes outside Pittsburgh. They're building $1 million homes in my community. I can buy a 50-acre lot out in it because there's no connection to sewer. Right? $400,000 I can buy it for. If you buy one that has a connection to sewer in my neighborhood, it's $3 or $4 million for that size property. So this not only allows for the replacement of failing sewer systems, but it can allow for brand new developments very rapidly, as fast as you can break ground. These systems, you're talking about clean water in hours, right? I mean, weeks from order, days or weeks from order. And eventually, part of our expansion and growth is to, and Riggs will attest to what we want to do, we want to create a warehouse. We want to create standardized systems sitting. Now, the mobile home park units will allow for that, right? Because they are all within 90% of the spec of one another, right? So they can literally sit on a shelf and simply be plucked off when the guy says, yes, I'll sign a contract. They're already funded by investors, right? They're already fully built and ready to go. They've been tested, they've been watered, they've been dewatered, and they stick on a shelf. So yes, to answer your question more fully, to replace existing failing septic systems, to dramatically expand rural and exurb property development without the need to ever perk a property, okay? I think that's even potentially more exciting.
Yeah, we're so excited about what's going on because, we're the 16-year overnight success. It's quite an amazing feeling to be making it, and that's a whole separate story, which I'll be happy to tell you guys.
See when the movie comes out.
Exactly. Lord have mercy. Okay, here we go. This is Dan Early talking about there's a big land boom going on north of Dallas, Texas, with home subdivisions, housing developments, and here's what he's done about it.
Good afternoon. This is Dan Early coming to you live from Munson Point, located just outside of beautiful Denison, Texas, located in the North Texas region, just south of the Oklahoma border. I'm on site today at our Veriskid 10K MBR wastewater treatment system. This is a system that Progressive Water Treatment through the Modular Water Systems product line, we were able to deliver this system to this particular residential development. What is really unique about this particular project is that it's a membrane bioreactor type of technology. It is our plug-and-play system. It is a system that as soon as it's offloaded and as soon as you connect a pipe in and a pipe out and make your power connection, you're immediately ready to water up the unit and to put it into operation treating domestic wastewater. This particular system has been online now for about 60 days. And the contract operator that's working for the developers is beyond thrilled. Jimmy Moon, he is the TCEQ licensed operator for this particular facility. And Jimmy was telling me earlier today that he is blown away by the treatment capability that the Veriskid 10K MBR provides. Jimmy's got 35 years of wastewater operations experience. And Jimmy has seen a lot of different wastewater treatment applications over the course of his illustrious career. Jimmy is very, very, very pleased with the simplicity of the operations. The Veriskid 10K MBR system is fully autonomous. We have a master control panel that is operating and monitoring and self-adjusting the treatment system in real time. And then it has our remote access capability where our process engineers and our back office can log in and can operate and track and assist in process operations with Jimmy Moon. This particular system is a very easy to deploy system. It does not require a lot of heavy excavation, does not require a lot of heavy pipe work. It is a fully self-contained advanced treatment system. Because it's modular, we can place a second, a third, or a fourth module in parallel to it, and we can double, triple, and quadruple the treatment capability. The system is capable of treating to a level that is suitable for reuse and reclamation. That would include irrigation, toilet reflush, dust control, water features, landscape water features that may be on a project site. That is what this project represents, and we are very, very pleased, very excited about our opportunities here in North Texas. North Texas, from basically the Dallas Metroplex north to the Oklahoma border, is undergoing an absolute development boom. Major corporations have relocated into North Texas, and that is absolutely driving the need for water and sewer. The localities, they are unable to keep up with it. And so a lot of the developers, especially in this neck of the woods, are turning to solutions like this that allow companies like Modular Water Systems and Progressive Water Treatment, allows us to deliver solutions to them that solve their water and sewer needs. That allows them to tap into the contingent future development value that is with the real estate that is that's located in this region. So check your maps, look at where Denison, Texas and Sherman are located. look at its proximity to Dallas, and just imagine that whole corridor expanding and growing with the influx of development and business and industry that's relocating to this region.
Really cool, Riggs. Have you guys installed any within city limits? If there's enough land?
Oh, no, absolutely we do. For example, breweries, car dealerships, all kinds of users out there are, yes, it's very useful for this out migration that's happening and so forth, but there's conventional users that are stuck with. There was a brewery in the East Bay of San Francisco, and the local city was requiring it to truck its waste to another county. We can't take your effluent, excuse me, right? And it's not the fault of the utility. They're just completely overstressed, can't take it. This is happening across America. It's a silent disaster, and we're here to solve that. And it's a growing movement. There's a unicorn called Gradient, which you can invest in. Again, you can't invest in it, but they are taking the high end. They're taking the PepsiCos of the world, and they're doing a fine job of it. We're the middle ground, of which there are many, many more, and we plan to make it like hotcakes for water treatment.
I often when I speak with investors, I do this equation. The middle class of businesses. So how many locations are water as a service is not new. It's been done for years and years and years. But in order for it to function in the previous iteration of it, you had to be processing millions and millions and millions of gallons of water a day, because you're going out to a location, you were digging a giant hole, pouring concrete, laying pipe. That's a building. And it's $1 million invested in the structure before you get started, right? So if you're not pushing out millions of gallons of water a day, you'll never make your money back. In addition, if that client were to fail pay at any moment, it's a complete loss to the service provider. Our drag in, drag out modality, the thing you just saw there, that's just a box, right? It's brought in on a truck. Anybody can avail themselves of that. And if they are like some locations where they may have shaky credit, you could literally just add additional security deposits, like a renter you really like, right? But their credit scares you. You charge an extra month or two security deposit. And if they don't pay, they take it away. The truck that brought it in, it takes it out. So here's the major difference with water on demand versus other similar assets. I described them how they are similar. Real estate, there are no vacancies, there are no foreclosures, none, okay? And with oil and gas, there is no exploration risk, right? Every time you go to drill a new hole and you decide to throw your money with the oil company, chances are they're right, but they could be wrong, right? And you could end up with an exploration risk, right? That doesn't exist here. Every place the system is going, they already have a major water issue where large volumes of dirty water needs to be dealt with. So we're kind of coming in after the mess is made, or as it's being anticipated being made with new developments and things like that, if that makes sense.
Yeah, I mean, I gotta become better friends with you guys. If we ever have an end of the world event, the first people that go are the ones that run out of water. So I'll be hanging out with you guys. We'll be set there.
And they said an EMP, if an EMP would have hit, blah 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 blah. The first round of death. I mean, I hate to get crazy, but the first 90 days, and that would be from dysentery, right? From lack of clean water. Now, of course, no one's planning on that, but there's only so much bottled water to go around. So the ability for end locators, 90% of where the water pollution comes from, to be able to deal with it themselves, it really does bend the curve on water pollution. When you think about it, Pepsi and Anheuser-Busch, they produce tons and tons of water. They have the capital to buy their own systems. They have the capital to employ all the engineers they need to run it. The small business doesn't have the capital and are responsible for probably 90% of the dirty water. It's an order of magnitude larger business, and they're not fussy. They're not some big giant corporation that's going to say, when you give them a quote to buy it, they go, nope, I'm not paying that. Yeah, if you do that, if you're dealing with Pepsi, they may just cross their arms and go, nope. And you go, okay, what will you pay? You get into that thing, right? This is Joe's Tires or Sam's Farm, right? And you go, look, here's the solve to your problem. Here's the money it saves you every month. And you've got no risk, just sign a contract. Great, where do I sign? Now, here's one of the best parts of this model. We own the asset. We own the contract. And now I have a multi-decade relationship to the end user. All of the business expansion he does will be a part of, right? At the beginning, right? And if anybody's ever sold anything for $1 million, being one and done is hard, right? The good news is you got the sale. The bad news is you're out of business again. this annuitization of these systems, turning them truly into private cloud-based utilities, the long tail that produces is going to be very, very attractive. As we graduate later, will be also extremely bankable, where we start to get into much cheaper money. Right now, our money's a little expensive. That, with this next move, that'll become, dramatically less so.
All right, cool. So anybody that wants to get started with you guys or get a little more in depth with you, schedule a call with you, Ken, on that calendar. It looks like anybody that's not accredited, the crowdfunding, they can get on that list if they email invest@originclear.com. That's over in the chat box. And then today's slide deck is also in there over in the chat box if anyone wants to kind of go through some of those slides one more time. But I'd probably recommend doing that along with a call with Ken. So as you look back through it, you guys can talk through and clarify any questions and things of that nature. So that's kind of the way to move forward with you guys, right?
Right.
Give us the hard questions.
Yeah, absolutely. I mean, that's, we always challenge, lenders, make sure you are asking those hard questions. It's your hard-earned money that you're trusting somebody else with. So you want to make sure that it makes sense and it's a win-win situation all around.
My big picture on this is that all assets today are highly manipulated. Gold, oil, everything, even Bitcoin, the ETFs came out and everything went down. So mature assets are being manipulated all the time. Water is early. We created it into an investable asset. It's steady and it's not being manipulated. Now is our opportunity to invest in this.
It's awesome. Well, Riggs, Ken, appreciate you guys. It was really cool.
Thanks,
I love
guys.
what you're doing. I think the first time you guys had come on the show, not with OriginClear, but some of the other companies, was probably 3 years ago now. Vendy would have to go back and look. But I feel like every time you come on, you guys just, are bringing new stuff, and it's really been cool to watch. So congratulations on everything you're doing. And I'm sure this will really help a lot of lenders, be able to move their money and explore this cool opportunity with you guys. Yeah, Thabiti said water is the most important thing on planet Earth, and couldn't agree more. So thank you, gentlemen.
Thank you, guys.
Everybody,
Thank you, bro.